Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our 3-day Metals and Mining Conference. Our next presentation is from Gold Terra Resource. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Gerald Pennaton. He's the Chairman and Chief Executive Officer of Gold Terra Resource, which trades on the OTCQB venture market under the symbol YGTFF and on the TSXV under the symbol YGT. Welcome back, Gerald.
Thank you very much, John. It's a pleasure to be on your platform and presenting the follow-up on the Gold Terra story. For those who've been following the story for a while, and for those who are first coming, welcome to Gold Terra presentation. We're focusing on high-grade gold in one of the largest underexplored camp in Canada, the Yellowknife Camp. And always remember, Yellowknife Camp was shut down in 2003, and there's been very, very limited exploration on the camp itself over the last 22 years. With all of this, I'd like to move on to the presentation, going to the forward-looking statement, as well as cautionary statement for you to read and get accustomed to. Our project, located in the Northwest Territory, is accessible by road. It's the end, basically, of the road in the Northwest Territory, where Yellowknife, a town of 25,000 people, mining friendly, is very important. Our share structure is listed here. You also have our top shareholders, which include Mackenzie Fund, US Global, Ingalls Snyder's, Eric Sprott, myself, Newmont, and SSI Asset Management from the Liechtenstein. A good 30% in very, very good hands. Now, going back to our team, we have a very small team. I'm not listing everything. I'm not going to go over my background. You can Google me. You can look at the different achievement I've done through my 40 years career. You can also look for Mark Brown, which is a seasonal, very important CFO. He used to work on the coal mine back in the 90s. And of course, we have a lot of good advisors, including Paul Bonville, Louis Dion, and Joe Campbell in the pictures. But more importantly, how do we create value? Look, gold is approaching $4,000 US. It hit 39.84 this morning. I mean, I've been involved in the gold business for more than 40 years. And I can say that I've never regretted one day, even in the downturn of the gold price. Why is that? It's simple. Gold is an asset. Gold is more than just a currency. It's a backstop for failure, for economic problems, for so many different things. It's been around for 7,000 years. It cannot be replaced on the periodic table. And the focus, after building Detour, a low-grade mine, my focus changed to go hard-grade gold. Less capital, better margins, and a longer lifetime that you can do. And remember, the strategy is to build shareholder value. How do you do this? You focus on the right target. Campbell Shear produced 14 million ounces of gold over about 5 kilometers. Yellowknife is the 6th largest high-grade gold camp in Canada, and it can grow even more. Why is that? Because it's only been explored properly over barely 5 kilometers, and we control 70 kilometers. And when you're going to look at the next slide, you'll see our land position extend from south of the coal mine all the way to about 50 kilometers north of town, where some of the good showing. We've already have 1.8 million ounces discovered so far the last MRE being in 2022. We've had some tough year, 23, 24, the first half of 25. And finally, people are realizing that the potential of finding more gold in Yellowknife is there. Our stock just ramped up almost 150% since August. Does it mean that it's over? No, I think it's just the beginning because the value is there. Think about it, 1.8 million ounces in the ground. If you assume, say, $100 per ounce of market cap or market capitalization could be a $200 million company. And we're sitting roughly at a valuation of less than $50 million US. Again, in the blue box, we have the Coal Mine, which I just briefly introduced you to. The property is very cornerstone to our whole package in Yellowknife. And the main reason it's because the Coal Mine has already left 650,000 ounces at 12 gram in historical resources. And we're planning a large drill program in 25-26 towards the end for winter, because the best time to drill. And we certainly have also very good target that we want to revisit since 2022 on the North Belt Wash Lake area. We will update our MRE in 2026 and followed by a PEA immediately after. Now, talking about the Coal Mine, what is the Coal Mine? You can see the town in the background. What's the importance of being in Yellowknife? Infrastructures. If you look at any project in the world, and I've done that for many years when I was at Barrick, we were looking at project. The first question mark that we ask on our due diligence, infrastructure. How much do you have? What are the infrastructure? And how easy would it be to build and bring all the equipment to build a mine? Remember, when you build a mine, everything comes from somewhere else. So you need to transport everything to your site. The Coal Mine site has also some very good, important advantage. It's got a mining lease, it's got a surface rights, it's got also some infrastructure that were left behind that don't need to be shut down. You're looking at a site that has been 98% reclaimed. And the only thing that people do on site currently, it's water treatment of the top 200 feet. Now, you can see in this slide, very importantly, the road, the access, a water treatment plant. You can see also a warehouse with offices and everything else, all the road, all the ditches, and a power line. Everything is there to skip a long-term permitting process. Now, the Campbell Shear itself, what is the Campbell Shear? Campbell Shear was discovered in the 1930s, and the mine basically started to be in production in those days. It started probably around 100 to 200 tons per day. But when you look at all the importance of the Campbell Shear, which is on the Coal Mine on this slide, you can see the section, both the Con Shear and the Campbell Shear are dipping to the west, and the potential is multiple million ounces. Already 6 million ounces have been found. Our focus initially, and now we're looking west on the long section. What is a long section? A long section allows you to look at all the information on a vertical slide or vertical panel, if you want to use the term, and show where the mine was operating, where the gold was mined, and we're going to see that again on the next slide, and where's the potential to find more ounces. Our initial focus was right on near surface. We've delineated 542,000 ounces at 3.5 gram in our 2022 MRE, between 200 meters and 400 meters vertical, accessible most likely via a ramp. We would probably target the first 5-6 years of the operation in that sector. When we use today's gold price, we're getting 700,000 ounces at 6 gram. This is not, look at it, 700,000 ounces of gold at $4,000 US or $5,000 US is the equivalent of 3.5 billion Canadian or 2.8 billion US. This is the in situ value of our first 5-6 years of the mine operation. We also need to do more drilling because we feel that this 542,000 or 700 could increase maybe up to 1 million ounces with more drilling in Q1 2026. We've also compiled another place which is called Northern Extension. Our preliminary assessment of the historical resource in this area, which was drilled from underground by predecessor operator, is very promising. And we will look to talk more about this in our next 43-101. But the potential to the north and to the south of the original mine is excellent and could yield enough ounces to support building a new mill. Again, just a quick slide showing you the infrastructure on the property. We have a shaft that goes down to 2,000 meters or 1,900 meters. We have the C1 shaft that can be used to dewater the mine. Remember, we don't have to dewater the mine immediately, but we will have eventually when we want to start drilling the northern extension Campbell Shear sector, which promised to be more than 500,000 ounces on its own. Just to give you an example of the target is been drilled from underground. It's not very deep. It's between 500 and 1,000 meters vertical. There's a sufficient underground access to access this project. So we feel that at the end of the day, when a decision to put back the mine in production within a couple of years from now, we will have certainly over 1 million ounces and close to 2 million ounces on this project alone. Now, just to tease you a little bit in terms of what is the potential of this mine in terms of grade, this is one of the latest stope that was mined towards the end of the life of mine. And the cutoff grade back then was 10 grams. Can you imagine? Gold was 340. The cutoff grade was 10 grams. They shut down the mine and left 600,000 ounces at 12 grams in the mine because probably it was below cutoff grade. All of this today in $3,800 gold is economic. But just to give you the sweetener, look at the 534 gram over 20 meters. These are the jewelry pocket. So you can definitely draw a parallel between the Red Lake high-grade camp and the Yellowknife high-grade camp or the Timmins high-grade camp because it is a very rich camp with very good potential high-grade mineralization. Does it stop there? No. This is an example of the Campbell Shear. I'm just going to pass. You can, if you'd like, we can see when the smoky quartz comes into the shear zone, you have a zone and you can see it at the bottom of the slide. But more importantly, what else do we have? I said Coal Mine is a cornerstone. We have the spot where to put the mill. We just need enough ounces to support building a new mill. Now, the northern part of the belt is very underexplored, whatever it's to the south, whatever it's to the north. Let's talk about the north. The north is showing, for example, the drill program we did in 2022, realizing like multiple mineralization of 7 grams over 3 meters, and of course, another one of 33 grams over 3 meters, right near surface. These potential zones are quite amazing because they yield a lot of potential for high-grade mineralization that can be accessed via a ram, via a small underground, and then brought 20 kilometers south to our mill. Our mill would become a hub for additional discovery that we made. So imagine this is a rebirth of the Yellowknife camp, where multiple deposits can be put back in production with infrastructures and with the Coal Mine mining surface lease and mining rights already in place. And if you believe of the importance of a mining lease and surface right, ask yourself the question, how I build Detour from IPO to gold pour in less than 6 years. And the parallel is there. It was the mining lease and the surface right that came along with the Detour Lake asset after we negotiated the purchase with Gold Corp Canada. So the same thing apply here. Again, the northern part of the Mispikul or Wash Lake area, where mineralization have been seen very close to surface, not very spectacular shear zone, but very spectacular quartz vein. So when you have a gold exploration property like ours, where we have almost no competition at all, you basically have a tremendous plumbing system, the Campbell Shear. And the resulting effect is that you have satellite smaller deposit near the Campbell Shear. We're just starting to write the story. And what has slowed us down over the last few years was the money supply. If this money supply comes back this year as it is, we will be much more active following up on those great showings and great intersection that we've had in the past in a very short time. A small word, commitment to ESG. I just spent the last 3 days in Yellowknife last week. I was there from Thursday to Sunday, actually. And of course, we kept a very good social responsibility contact with everybody, with all the stakeholders, with the First Nation, and with the government. And the community relation is at the top of the list. We are not there to work under the radar. We're there to work with the community to make sure that the Coal Mine will be a successful restart. And at the end of the day, our goal is to achieve gold production again. And if you have any interest into asking question, I kept the presentation short to let the audience interested in question to be able to do so. The first question, what are your key exploration targets for 25, 26? I'm going to go back quickly, very quickly on the map itself. And show you the I think, not sure if I can, if you go back to the slide that, if you go back to the slide that shows the presentation, you can see, I'm sorry that this is sometimes a bit interesting, but if you look at the long section, our primary target on the Con mine is to go back near surface between surface and 700 meters. The main reason for those drilling is to bring more inferred resources into a bigger area. So all of the surface mineralization that you see on the Con mine is very close to surface. At the same time, by doing so, we don't need to dewater the mine. Basically, when you look at the potential for the north extension, we would rather prefer do it from underground than from surface. So with the current gold price, the first tranche that we have near surface will allow the company to focus on, say, bringing the resource to 1 million ounces. 1 million ounces of resource at the Con mine is almost 7 to 10 years of mining, which allows you at the same time to use the cash flow to dewater the balance of the mine and then focus on the north extension drilling and eventually mining it before you go very deep. There's no question that the potential of the Con mine, we're planning to put 2 drill over the winter to drill for a period of about 4 to 6 months, starting in December this year, for the preparation and start drilling. Now, the other 2 drills that we're planning to do are more exploration to go back, and I would like to go back to the Wash Lake area. It's 20 kilometers north of town. We're following up on some very high-grade area, such as Mispecol and Wash Lake, and of course, the northern and eastern extension. Because the trend, which is only limited by 500 meters, it's quite open north and south of the Wash Lake. So other question, drill reserves, like I said, the one question comes from what is the potential catalyst for drill resource updating and permitting process. I'm going to talk more about drilling. We are planning to drill before the end of the year, getting all ready to drill. Remember, we raised a good amount of money in the spring, so we still have somewhere near $2.5 to $3 million in the bank. It allows us to, get ready for a drilling program season that mainly will be from December all the way to the end of April. During that period of time, we're planning to have 2 to 4 rigs, some on the Con mine, some on the northern belt. We receive a grant from the government that we want to fulfill of almost $250,000, and we're planning to spend, or $300,000, I should say, and that's where we're planning to do all of that work. There's a lot of different questions. So investors should be, to answer the question that was asked by the investor, there's no question that the drill result will self-sufficient the news flow that we're going to see over the next 12 months. And eventually, to answer your question, we're planning to have an MRE by the end of 2026, follow immediately with a PEA. We've already started to work on the PEA, for example, on that MR22 MRE, or mineral resource estimate, because we've already done the metallurgical test work. Remember, on the permitting process, we're planning to use the surface right and the mining lease of the Con mine as the main asset and main area where we will put a new mill. There's a question on a smaller mill. We're planning currently to have a 2,000 ton per day mill. And what we're trying to do with this mill is to sustain not just the Con mine, but also welcome some of the asset that we have. So our mill could produce about 140,000 ounces, and the millization would be coming from the Con mine, probably at a rate of 1,000 ton per day, and the balance of 1,000 ton per day will come from some of our satellite deposit to the north. So the footprint to the north will be limited only to the mining activity via a ramp or via a very small open pit, which are not permitted. And we plan to bring this ore into the mill 20 kilometers south. Another question, what are your thoughts about the share structure? So when you have share structures, it can be a problem sometimes. Some people will say, oh, you have too many shares outstanding. Look, I built Detour from 40 million share to 110 million share, raised $2.6 billion. We inherited, when I joined in 2019, a share structure that I'm not a fan of. You know, I did not enjoy doing tree financing, at 5 cents a share over a period of the last 2 years due to a very difficult, tight money supply. But at the same time, we needed to survive. As you know, I don't do warrants. I stay away from flow through as much as I can. And I think I focus on shareholder valuation. And yes, the 400 million share might be too much to build a mine. But at the same time, I think how can I say that? I think it's important to create the value with the current money supply. And if we ever need to do something about the share structure, we will do it at a very important catalyst. I look at some other story. I mean, you could miss on doing a rollback, or you can do a good one if you have a good catalyst. A good catalyst, for example, could be someone writing a check for $50 or $100 million. That shows the support into the company. Our market cap is low. Doing a rollback today will not be appropriate. I think we can carry on with the project. We have a bit more wind in our sail. We can access a better money supply, achieve the MRE and the preliminary economic assessment, which will give a lot more comfort level for people to put more money in the company. And I think that's, always on your back of your mind. But look, there are companies that have 1 billion share and they're worth $5 billion. I'm not saying that we will be one of those, but we can create the value regardless of the number of shares, in my mind. I've already, I think, explored on the key target for exploration. There's a question about the Yukon jurisdiction. I would like to answer that, sir, because we're not in the Yukon. And the Yukon has its own problem, its own access, its own infrastructure challenge, its own nightmare. We are working in the Northwest Territory. It's a very different jurisdiction, very independent of the Yukon. So that Northwest Territory, being in Yellowknife, having the Con mine, which is a mining lease surface rights, allows you to be very close to all the stakeholders. And with the diamond mines all shutting down in Yellowknife, I can tell you that the support, which answers another question about territorial government, local, whatever is the town of Yellowknife. I was just there for 3 days. I know that we have all the support with the diamond mine shutting down over the next couple of years to have an excellent, how should I say, an excellent support to put back the Con mine into production. This mine has a tremendous potential. The Con has the potential to be 100,000 ounces production for the next 20 years if we achieve what we need to achieve over the next couple of years. I hope I was able to answer that question. And the next one. So there's a new question again. How do you planning to finance your upcoming drilling and development milestone through 2026 and 2027? We have a timeline in the presentation that you can download. The timeline is representative of what I need to do over the next couple of years. The timeline shows, for example, that I need to drill. I need to drill over the winter. I talked to you about where the drill will be, mainly near surface on the Con mine, south of the Con mine and close to the Con mine on the south end. The north end, I have a plan to drill there. But that plan, if I can avoid it, I'm not going to do it because I would rather prefer doing it from underground. This is why we stopped the deep drilling. So the Northwest Territory is quite supportive of our effort to bring back the Con mine into production. Remember, Yellowknife is a mining town supporting a lot of the diamond mines. The diamond mines closing, we are the only project close to production in the Northwest Territory. So I think we get all the support. And the money will be raised, like I've always been very careful about dilution. If you think that I was worried about financing at 5 cents, I had to do it. But look, I managed to do it on a private placement. My support from my 30% shareholders was amazing. And we were able to keep working on the project despite the difficult money supply. Now we're in a different ball game. Look, the stock is trading over 10 cents US. For a long, long time, it was trading at 3 to 4 cents US. That's like a very good lift. And knowing that I don't need to finance right away. And I'm very careful. You know, I'm a big shareholder. I'm aligned with my shareholders. I don't have any stock option. I bought all my stock into the financing or on the market. My leverage is 3% on the company with 14.5 million shares. So I understand how dilution function and you need to avoid it. So you go step by step. I'm not planning to raise all the money of the things I need to do over the next 2 years. But I need to do a certain amount of drilling next winter. And we're going to raise the money only for that because I know we will have a lot of results coming up that are excellent over the next 12 months. I don't see any other question, I think. If anybody has additional question, I would like to thank you very much for being attentive to our presentation. And please, YGTFF is a very good opportunity to buy gold at much less than $20 an ounce. So it's an option for the future. And if we deliver all the ounces in the future exploration program that we intend to do, you will see the reward of your effort and investment. Thank you very much, everyone.